Hi, hello, namaste, hearty welcome to yet another interesting iLead tax talks. Thank you very much for joining us today. I'm so happy, to get the questions emailed to me. So thank you very much. Yeah, I didn't really name the company, iLead, considering these things, but given my experience and my interaction with the clients, I came up with this. So thank you for all your appreciation, and thank you that you are also able to think on this. Yes, we have to work on increasing our incomes, we have to work on decreasing our liabilities, we have to work on budgeting our expenses, and we have to work on investing for our assets. And at the end of the day, each of us are led by a dream, a vision, a purpose. And proper financial management is definitely a good path to lead us into that excellence. So when you see, our iLead Tax Planners logo also, we put it as ownership and excellence. You take the ownership for your finances, and we will strive for excellence in it. Yeah. Well, let's get into the iLead Tax Talks today. So thank you once again for joining us today. Hearty welcome. And I'm so happy, when husband and wife together they get on a Zoom call. It makes me feel so happy, So we call them Zimmedar taxpayers. Responsible taxpayers, they take responsibility for their family, for their finances, and they don't want to waste money in taxes. Yeah, you heard it right. You heard it right. Well, so today, we are going to talk about backdoor Roth IRA. A lot of clients ask me, Nanda, can I do, backdoor Roth IRA, that, this, and all. Now, before we get into that, you know what is an IRA, right? An individual retirement arrangement and all that. And there are different types of IRAs, okay? Most popularly, you must have heard about traditional IRA, wherein you contribute some $7,000 or $8,000 if you're 50 plus. It has required minimum distributions also. It is tax deductible when you make the contribution, and when you get the distributions, they are taxable. That is about traditional IRA. And then you have Roth IRA, and here the contributions are made uh, and it is not allowed as a deduction. I mean, you can't claim it as a deduction. So it is like made with after tax dollars, and earnings, they grow tax free. And here also the limitation is $7,000 or $8,000. But the challenge with this is you cannot contribute to a Roth IRA if you are making more than a particular amount. If you are making in your income more than a particular number, like for 2025, if you are making more than $165,000, if you are a single, or if you're married and you're making $246,000, then you cannot make any contribution to a Roth IRA. Okay. And then you must have heard about SEP IRA. SEP IRA, ideally for self-employed individuals and then small business owners. It is a tax deductible IRA contribution, and contribution limit could be 25% of the individual's compensation or $69,000, whichever is less. And then you must have also heard about simple IRA. This is for small business owners with 100 or fewer employees, and here the contribution limit is $16,000 or $19,500 if the person is 50 plus. Employer also makes matching contributions here, and that is another one. And the last one I can say is a self-directed IRA. Could be traditional or Roth IRA, and it allows for a wide range of investment opportunities, especially in real estate, private equity, and all. And very high earning income people, will focus, more on the self-directed IRA and things like that. Now, here when we are talking about backdoor Roth IRA, as you see here, it's a strategy, not a type of IRA. It's not another type, just like traditional IRA, Roth IRA. It's not another type of IRA. It's just a strategy that allows high income earners to contribute to a Roth IRA, even if their income exceeds the IRS limits for direct Roth contributions. So, as I said, if you are earning beyond a particular limit, beyond a particular amount, you cannot contribute to a Roth IRA. Now, how do we combat this? Now, what is a Roth IRA? As I said, it's a retirement account or a retirement arrangement where you contribute after tax money. Your money grows tax free and you withdraw it tax free at the end of retirement, death, disability, whatever happens. But here there's an income limit to contribute directly to a Roth IRA. So, as I said, married filing jointly, because most of our clients, they have families. Uh, so, there's a phase out limit, that happens $236,000 to $246,000. Here, the contribution amount is reduced, and beyond 246, you can't contribute to Roth IRA directly. So comes the strategy called backdoor Roth IRA. Now, what happens? How does this backdoor Roth IRA really work? How does it work? So here what happens is you contribute to a traditional IRA. Step 1, you contribute to a traditional IRA. Make a non-deductible after-tax contribution to a regular traditional IRA. Regular. And the maximum limit for 2025, if you're watching it next year, the amount will be changing, whatever is the year that you're watching this video. But this is relevant for 2025 tax year. So the maximum for 2025 is $7,000 or $8,000, if the person is age 50 plus or something. Next is convert it into a Roth IRA. So whenever you say backdoor, you just remember these two keywords. In the first one, I put it in single inverted commas. The next one, you see it in double inverted commas. Contribute, convert. Getting? Say that. Contribute, contribute, convert, convert. Say that. Yeah, it'll just remain in your mind. So convert the traditional IRA to a Roth IRA, and since it was after tax, minimal or no tax may be due because the tax is already paid on that. Now, here there's a caution. There's a caveat here. You must be aware of the pro rata rule. Pro rata rule. Now, what is that? It means IRS can levy a tax on conversion of your IRA. You're converting from a traditional IRA to a Roth IRA. From what is taxable in the event of distribution, you're converting that to tax free in the event of distribution. In traditional IRA, distributions are taxable. In Roth IRA, they are not. So you are converting a traditional IRA to a Roth IRA. So there might be a pro rata tax. So what does it say? If you have other traditional IRAs with pre-tax money, the IRS will calculate taxes on the conversion based on the proportion of pre-tax versus post-tax across all your IRAs, not just the new contribution. So a surprise tax bill might be expected. If only if you had other traditional IRAs earlier. Now, how to avoid this pro rata rule? You can roll over. So roll over this pre-tax IRA funds into a 401k if that is allowed by the IRA plan, and this will clear the way for a clean backdoor Roth IRA conversion. And as much as possible, don't delay it. So when I talk to my team also, ASAP, is it as slow as possible or is it as soon as possible? So that's something, that we got to look into. So here there is something called as practice same day backdoor. Same day. You can convert right after contributing to a traditional IRA, and that's why it is called as same day backdoor. No official IRS rule requires a waiting period, but some people wait for a few days to avoid the step transaction argument, though it is rarely challenged. Some people, they want to wait for a particular time. So, but what the market says, what the advisors recommend is practice same day backdoor. At least, within that week, within that work week, just try to uh, you know, roll it over. Then, who should be more cautious about these things? High earners who are earning, above the Roth income limits, like what I said, the 246K and all, and people without existing pre-tax IRA balances. See, if you add pre-tax IRA balances, then the pro rata tax, and other things may come into picture. Otherwise, it's good for you. And investors who want tax-free growth and withdrawals in retirement. And that's the very purpose, why we are putting into Roth IRA. Now, here a quick example. Marshy's AGI is $270,000 for the tax year 2025. As you see, that is way too much for a direct contribution to a Roth IRA. So what he should do? He must first contribute $7,000 to a traditional IRA. Call it as non-deductible. It will not be deductible. So it becomes a non-deductible. There will be a form 8606 which will pop out. Immediately convert that traditional IRA account into a Roth IRA. And if he had no other IRA balances, the conversion is tax-free. And now Marshy got $7,000 in a Roth IRA legally. And even though his income is too high for a direct contribution, backdoor IRA is, very commonly, practiced among lot of high net worth individual taxpayers. And if you have, more questions on this Roth IRA, please do write to me at asknanda@ileadtax.com, or if you need any personalized tax planning solutions also, please do write to me. Let's review your iLead together. It's good to have, a Zoom call as a family and understand, your taxes. So until we meet again, please do subscribe to our channel. Please go through our other tax videos also. And if you feel you need some information on a tax situation that you are struggling with, please feel free to write to me and I'll be more than happy to assist you. Thank you very much. Until I see you again in the next iLead Tax Talk. Bye bye. Have a wonderful week ahead.